In this video, we'll review AT&T and see if it's a stock worth buying. AT&T is one of the biggest phone carriers in the US and it's down 25% since the beginning of 2020. And a lot of people are already waiting for the big rise of AT&T stock. The last time AT&T was that cheap was back in 2012. That said, AT&T is not a perfect stock, that's why we want to know what difficulties they're facing before jumping in. I'll also share with you my current position and why I think this stock is worth buying. Also, according to YouTube statistics, only a small percentage of people that watch my videos are actually subscribed. So if you end up liking this video, consider subscribing. It's free and you can always unsubscribe later. Enjoy the video. AT&T is the largest telecommunication company in the world and has originally been founded in 1880 under the name Southwestern Bell Telephone Company. AT&T, like other companies in the 19th century, received a government-sanctioned monopoly, like other companies at the time, for example ExxonMobil. And if you don't know much about ExxonMobil and its history, I definitely advise you to watch my previous video where I talk about ExxonMobil. And because of that antitrust suit against AT&T, AT&T ended up divesting itself, leading it to the creation of regional telephone companies, known as Baby Bells. In July 2020, AT&T has named longtime executive John Stankey as its next chief executive. John Stankey has spent 35 years of his career at AT&T, so speculations are that he will continue to lead the current business model. AT&T primarily earns revenue from its communications business. For example, that includes wireless services and equipment and entertainment services, but the company also generates revenue from Warner Media and the advertising services segment Xender. AT&T generated roughly $171 billion in revenue in 2018 and $180 billion in 2019, an increase of 5% since 2018. Obviously, 2020 will have been a challenging year not only for AT&T but for most of the companies out there. AT&T acquired satellite TV broadcaster DirecTV for $49 billion in 2015 and Time Warner for $85 billion in 2018. AT&T is very focused on developing one of the most talked about technology, the 5G. For a telecommunications provider, the 5G is a growth opportunity and AT&T has definitely understood that they needed to make something about it. On December 21st, 2018, AT&T has launched its mobile 5G network in 12 cities around the United States. The first Samsung 5G phones were also released in 2019. The phones that are made especially so as to adapt to the new 5G network. However, according to AT&T, the 5G market will take a long time to grow, and this is really a long-term opportunity for them and not to expect very short-term returns. Regarding AT&T financials, they managed to increase their revenue from 2018 to 2019, but 2020 will have been a tumultuous year for everyone, and with a lot of live sports cancelled, the firm's entertainment segment continued to struggle, losing 590,000 paid TV subscribers for the quarter. Because of the coronavirus, a lot of live sports had to be cancelled, which would have been broadcasted on AT&T's networks and which would have made them earn revenue. AT&T's third quarter profit declined to 76 cents a share, down 19% from a year earlier. However, in terms of wireless phone customers, AT&T has gained 645,000 customers. So now that you know that information, the question really is, should you own AT&T? And to answer that question, we really need to look deeper into certain reasons. The first time AT&T reached $29 per share was in 1995, and since the crash of the dot-com, where AT&T fell from the high 50s to where it is now, the stock has only been stagnated since the 2000s. So of course, for investors seeing that the stock didn't really go up in the meantime, it's not necessarily a good sign, and there are a lot of worries around AT&T performance. According to a recent report by CNBC, AT&T is working to sell a portion of DirecTV and other paid TV businesses as the numbers are continuing to fall. Even though there are some really bad points about the number of subscribers that are falling on DirecTV, for example, there are some really good ones to be made about AT&T. Due to the high cost of building a 5G network by nature, Verizon and T-Mobile are its only 5G related competitors. This gives AT&T room to actually capture market share, and they are the only three ones for the moment for the 5G market. However, we might see in the future new competitors entering this market as the 5G market is only starting. And now that different phone providers actually start producing 5G phones such as Apple, more customers would actually switch to the 5G network, and that would potentially push the AT&T's revenue up. And obviously the danger here is that T-Mobile and Verizon actually captures those customers earlier than AT&T because of the better offer, for example. However, I don't think that AT&T is going to rise anytime soon, because as long as we have the pandemic that is going on, AT&T will continue to lose subscribers. And in my opinion, if you own it, you shouldn't expect it necessarily to go up anytime soon, but we should at least see a correction toward the $35 per share level. But from an investing point of view, I think it's really important not to dismiss one of the strongest talking points which we will see now. AT&T has increased its dividends annually for 35 straight years, and the fact that they have been increasing their dividends for over 35 years makes them part of the dividend aristocrat group. In the last 3 years, AT&T has paid roughly $40 billion to its investors, and also AT&T has a ton of free cash flow it has accumulated over the years, but of course there is always a risk that the company is going to stop paying dividends. However, with the pandemic, which is a very good example of a black swan event, if a company doesn't stop paying dividend even during a black swan event like this one, the one that we're living right now, well, it's a good sign that the company is really committed to continuing paying dividends to its shareholders. AT&T's current dividend stands at $2.08 per share, representing a yield of 7.21%, one of the highest dividend yields among the dividend aristocrat group. And personally, I truly think that this is an amazing dividend yield that we're getting, even though the stock is not in its best shape in terms of fundamentals. And because it's part of the dividend aristocrat group, AT&T has gained a lot of interest in terms of investing, and the company can easily afford the dividends. In the latest quarter, AT&T has generated a free cash flow of almost $8.3 billion, making its quarterly dividend payment of $3.7 billion very sustainable for AT&T. And to sum it up, AT&T's dividend is actually quite safe, and with the 7% dividend yield, it's one of the highest dividend yield of the dividend aristocrat group. And I personally think that this is a great buy, not necessarily because you think that the stock is going to go up, but more from a dividend perspective. And my philosophy on AT&T is that I truly think that the stock over the next month or over the next years is going to rise because of opportunities such as the 5G. And because the stock is at a historical low right now, I think it's a very good opportunity to actually buy some shares, benefit from the very high dividend yield that there is right now, because know that the dividend yield is actually high because the stock price is actually so low. And so this is really a good opportunity to add a very high paying dividend stock to your portfolio without taking too much risk. And in my case, if the stock actually falls even lower, I will certainly buy more shares of AT&T because the yield will actually just increase. And it will be interesting, even if the stock falls, to see how AT&T is actually going to react in terms of dividends. I truly don't believe that they're going to stop paying dividends anytime soon, and that would really surprise me if they would, for example, stop increasing their dividends. It feels that they're really committed to that, and I truly think that even if the stock falls lower, I will be the first one to buy more shares at a discounted price so as to enjoy bigger dividends relative to the stock price. And of course, a position in AT&T should really represent a small portion of your capital. That's something that I'm really focusing on doing, and that's why being part of a bigger portfolio, having a position in AT&T is really not going to hurt your portfolio in my opinion. If you'd like me to review some other stocks, please let me know in the comment section what other stocks you'd like me to review, or if you'd like an opinion on some stock. I hope you enjoyed this video about AT&T. I wish you all the best, and I'll see you in the next video.